What's up, guys? I'm nobody special. And wouldn't you know it, the mainstream media has finally gotten around to covering the story at Evergrande and the Chinese real estate collapse. It's nice of you guys to show up to work today. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm nobody special. And yes, the mainstream media is finally getting around to giving the Evergrande story the coverage that it deserves. You'd think they would have got to that a little sooner, but hey, they waited until the Dow opened down 650 points today. Bitcoin was down about 10%. Now that there's a sea of red, now they're paying close attention to the situation in China. And it doesn't matter because the La Palma volcano is going to slide into the earth and cause a mega tsunami and kill us all anyway. Just kidding. I'm trying to tone down the alarmist rhetoric a little bit. But before we shrink my big fat melon of a head, guys, if you wouldn't mind, please hit that beautiful transitory like button, subscribe to my channel, hit that notification bell. It would really help me out. It would help this channel to keep growing, and I'd be forever in your debt. Now let's shrink my big fat melon of a head and get into what is going on today. There is the La Palma volcano, by the way. This is not the biggest story, guys. I am not trying to scare people here. I'm just pointing it out. I don't know if you remember, it was about 10 or 15 years ago that it was either Nat Geo or the History Channel ran this story about the mega tsunami that was going to wipe out the whole east coast of the U.S. It was going to be caused by this landslide on a volcano in the Canary Islands. Well, that was the La Palma volcano, and it erupted yesterday. And no, there has not been a catastrophic landslide. No, there is not a mega tsunami hurtling towards the U.S. as we speak right now. But I just thought I'd picture this out. They like to talk about black swan events. Well, a volcano causing a tsunami could be considered a black swan. Anyways, this worth keeping an eye on this. But as for right now, guys, I don't want to be pushing the FUD too thick or anything here. This is a local story only right now. All right. So here is the big story. Dow sheds 500 points amid growing risks, on pace for its worst sell-off since July. July wasn't that long ago. I don't know why we would say the worst sell-off since July, but anyway. But if you scroll down a little bit in the CNBC articles, it says there was a number of reasons for the sell-off. And here in the first paragraph, investors fear a contagion sweeping financial markets from the troubled China property market. Hong Kong equities saw a big sell-off during Asia trading session Monday. The benchmark Hang Seng Index plunged 4% with embattled developer China Evergrande Group on the brink of default. So finally, Evergrande is getting some coverage in the press. Guys, it took you long enough. I mean, geez, this is a $300 billion bankruptcy that's been in progress for a long time now. Nice of you guys to come to work today. Anyway, but I move on. I put a poll on my channel on, I believe it was Saturday morning or Friday night, asking you guys, do you think Evergrande would be trending on Twitter by Monday? And 74% of you said, yes, it will. And congratulations to the 74%. Because here it is. Right there. There's a screenshot from my Twitter app. Evergrande trending in business and finance. In case you missed it, China Evergrande Group, which has about $305 billion in liabilities, said to engage advisors in bankruptcy is what the headline went. So, congratulations to the 74% of you who guessed that it would be trending by Monday. You have won absolutely nothing, a $0.0 value. Congratulations. Don't spend it all in one place. All right. We talked a little bit on Friday in my video about how these executives had cashed out and how they were putting social pressure onto their employees to encourage them to basically loan money to the company to buy these wealth management products from Evergrande, and how they were tying performance reviews to it and sending out threatening messages like you will be dealt with. Well, there's this story. It's actually from the New York Times. It ran over the weekend that Evergrande workers were being given a choice: loan money to the company, i.e. buy these wealth management products, or lose your bonus. And bonuses has kind of a negative connotation to it because a lot of people don't get bonuses. But if you work in a job where a bonus is a major chunk of your annual income, threatening somebody with bonus is threatening them with real financial hardship. Even though bonus kind of sounds like this golden parachute thing that only big execs get, it's not the case, right? Bonuses are used to coerce behavior with employees at smaller companies, even at lower levels. And in this case, the worker bees here in this communist utopia, they were ripped off. All right, these CCP connected executives pressured their employees to loan money to the company, and then as soon as the employees did it, the executives who knew the company was going bankrupt cashed out their investments, took off with the money, and ripped off their employees. I want you to keep that in mind, all right? Greed and corruption are not capitalist qualities. They're human qualities, all right? And we have this misnomer, I guess, because most people in this country have never lived under communism. I haven't either. But let's not pretend that communist rulers are not greedy, are not corrupt. Like they're somehow, because they've adopted this principle of sharing and common prosperity, that they're somehow immune to human tendency to rip people off and to only think for yourselves. And here it is on full display. These Communist Party executives stole from their employees and took off with the money. So think about that the next time somebody tries to blame capitalism for the human condition. It's not a function of capitalism. Actually, if you ask me, capitalism is the single greatest protection against this kind of behavior, because capitalism, true capitalism, not what we have, but capitalism enables people to vote their wallets away from crooks like this. Anyways, but I digress. So that's another example of how Evergrande was just pressuring their employees, and they victimized their own people. It's really sad. We saw something similar with Enron. When Enron was going belly up, company executives were encouraging employees to buy the stock in the company even as they were cashing out, knowing that these employees were losing their investments and that their pensions were at risk. So, this kind of thing happens everywhere. It's not unique to China or to the United States. The big fear, though, with the Evergrande story has been contagion. And I want to point to this chart. Let's see. Can you see this chart? Oh, we got to move my melon here. Look at the nosedive on this chart. This is Sinic Holdings Company, a company I had not heard of before this morning. But Sinic Holdings is a much smaller Hong Kong-based real estate developer. I want to emphasize this is a much smaller company. Before this big dive, Sinic was a $2 billion company, or roughly $2 billion. And I say before because Sinic is no longer a $2 billion company. Now Sinic is about a $250 million company because they fell 87% in trading yesterday. In one day, this company dropped 87%. Folks, this is the contagion. This is what is talked about when they say, is there systemic risk or is there a risk of this spreading? Somebody started dumping Sinic stock because of what's going on with Evergrande or some risk, and it drove this price down. Somebody got mass liquidated. And let me bring up the article here talking about dropping 87% and that their trading was halted, so it may have fallen further if they allowed it to. But there was something in this article I wanted to point out, that the company has a 9.5%, $246 million bond due October 18th. All right. Well, now the market cap of this company is less than the value of the debt that's due in October. All right. So, folks, this is how wealth is just wiped out during a deflationary crash. We saw almost $1.75 billion worth of equity in this company just vanished. And now because of that, or maybe not because of that, or along with that, you've got this $250 million in bonds. That wealth is probably about to vanish. This is the deflationary death spiral. This is a credit collapse happening in real time in China. Now, again, Sinic is a small company. I want to emphasize that. This started out as a $2 billion company, nowhere near the size of Evergrande. All right, but this will not be limited to just this Sinic company. There are going to be other companies like this that this happens to. And, the big question is, what is the Chinese government going to do? The Chinese government has maintained their position that they are not going to bail out Evergrande, that they are against the concept of a moral hazard. Moral hazard is when you invest with somebody else's money and you're not on the hook for the losses. That is a moral hazard, right? When you reap the benefits of gains, but you don't suffer any of the penalties of losses, that is a moral hazard. And that was one of the big, critiques, or one of the big criticisms of Wall Street during the global financial crisis, is the executives who made all these reckless investments. They got their golden parachutes, they cashed out their stock, and they left. I mean, They didn't lose everything like the people that they affected, like their investors lost everything. And that's a lot of where like the Occupy Wall Street movement came from. And honestly, rightly so. When you would take responsibility for somebody else's money and you invest it and you lose it all and nothing happens to you, that sucks. That's wrong. All right. So, anyways, so what China is doing is China is claiming that they're not going to bail out these companies because that creates the moral hazard, because it incentivizes this reckless behavior, knowing that the public will foot the bill for your stupid decisions. And Beijing knows that there are hundreds of these Sinic companies out there, just like Evergrande, that will be next in line at the trough if they start bailing out this company. But again, Beijing has the other problem. They have to maintain social order. If people start losing everything, Evergrande owes apartments to 1.5 million people. They took 20% deposits from 1.5 million people to build apartments. And they haven't even started work on these apartments. So that's 1.5 million people that are going to lose everything if Evergrande goes under, just from the down payments on the apartments, let alone the tens of thousands of employees who bought the wealth management products, the pension funds, the investors who own the bonds, the suppliers who aren't getting paid, who have employees who aren't getting paid, right? Down the line we go. So if Beijing just maintains their hands-off approach here, it's going to cause a lot of problem for them. You know, I heard somebody mention this in an article. I think it was Economic Ninja mentioned it in one of his videos, where if I owe the bank $1,000 and I don't pay, I have a problem. If I owe the bank $1 billion and I don't pay, the bank has a problem. And that's kind of the situation where we're at with Evergrande right now. Beijing has a real problem on their hands. The Evergrande executives know this. All right, so they're kind of, let's just say Evergrande has been incentivized to create social unrest around this default. Because the more social unrest that springs up because of Evergrande, the more likelihood that Evergrande gets bailed out in some way, shape, or form. So there's some interesting Communist Party politics at play going on with the Evergrande story right now, and I'm very curious to see how this develops. All right, something else I wanted to mention about Bitcoin absolutely took a dump today. Let's bring up the Bitcoin chart. Again, it looks like a lot of things are starting to recover, but Bitcoin is not among the things that have recovered. Let's full screen this chart. Go back a little bit. So it has been down, down, down basically all morning for Bitcoin. We're now around 43,000. We started the day, I think when I went to bed, it was around 47, 48,000. This is the Tether story, and this is the liquidations. Now, one of the things I want to point out is that Bitcoin has been a vehicle for capital flight out of China recently. And I have to give credit to my anonymous benefactor with the situation going on with Tether and with Evergrande, because this person gave me this information and kind of, we were talking over what was going on with Tether and Evergrande and kind of illustrated this picture. One of the reasons why China has really cracked down on crypto has been because China has very tight controls on money leaving the country, because China was worried about capital flight when all of your money, when your investors in China have almost nowhere to put their money, right? It's one of the reasons why the real estate market is in such a bubble in China. And the Chinese stock market is not really a viable investment. It's very volatile. It's very corrupt. It's been known to just absolutely crash. And Beijing bungled the stock market bailout back in 2015. So Chinese investors don't really put a lot of faith in the stock market in China. So if you're an investor in China, you don't have a lot of choices. You can put your money into this bloated, ridiculous real estate market where there's entire ghost cities that have been built that nobody lives in, or you can get your money out of the country. But China has very strict controls on money leaving the country. So what does that leave you? The option of, well, the easiest way to move money across borders is Bitcoin, cryptocurrency. And I think a lot of Chinese investors were doing this, and I think that's one of the reasons why Tether has been drawn to this commercial paper market. And I think it's one of the reasons why China has really cracked down on cryptocurrency, on mining, and on the exchanges, is because they didn't want Chinese wealth leaving mainland China. Well, I think it's a little bit too late, and I think a lot of Chinese have put a lot of their wealth in the cryptocurrency in order to just have some other place to put it or to get it out of the country if they ever need to. Well, that means this Tether situation is really a risk because they've done this through Tether, through stable coins, and through these Tether exchanges. And Tether is supposedly backed one for one by US dollars. Well, no, they're not backed by actual dollars. According to their attestations, actually most of Tether's backing is in the form of treasuries and commercial paper. And we talked about in other videos how nobody in Wall Street has ever really heard of Tether or does business with Tether. So all of this commercial paper that Tether owns that they use to back up their stable coins is probably from China, because China is the only other place you can get that much money worth of commercial paper. It's the only other place in the world. So the thing going on with Bitcoin is there is a big question of, will Tether be able to pay if people start selling their crypto in order to cash out? Now, the way it works, you sell your Bitcoin or you sell your Ethereum and you get your Tethers back if you're on these exchanges. And then you have to trade your Tethers for US dollars. Well, when the S hits the fan, it's a good bet these Tether exchanges are going to say, oh, we're down for maintenance, or oh, we're having problems, we'll have to halt redemptions. But don't worry, everybody will get their tokens back or whatever. That's what happens. These exchanges, whenever there's a run on crypto and people start to cash out, these exchanges always have problems. So keep that in mind. If you're on one of these exchanges that has had one of these convenient maintenance outages during a run on crypto, keep that in mind. Now, again, not a financial advisor. This is not financial advice. Do your own research, your own DD, arrive at a decision that's right for you based on your unique situation. Thank you. Now that my butt is covered. But if you're still doing business with one of these exchanges that goes down for maintenance every time Bitcoin sells off, what are you waiting for? That's my question to you. What are you waiting for? What would it take for you to not do business with one of these people? I'm just going to leave it right there. Again, not financial advice. Let's just say I don't do business with them. Now, hypothetically, one thing I might consider doing, were I in the unfortunate position that I get stuck in Tether, that my wealth is trapped in one of these stable coins amid a collapse. I just want to point this out, and I am not in any way affiliated with JM Bullion. This is just an example here, okay? I just want to point out that one possible way, if you ever really had to, like, in an emergency, get out of crypto, and I don't advocate selling into a panic, and again, not financial advice. This is just, if I ever had to, like, bail on my Bitcoin, this is one of my emergency plans. You can go to one of these exchanges, and there is an option where you can buy crypto with your Bitcoin. And if you click on it here, it says what they expect. They accept Bitcoin, Bitcoin Cash, Ethereum, Doge, and 4 US dollar pegged stablecoins. I'm not sure if Tether is among them, but suffice it to say, this is one possible exit strategy. If I ever needed to get out of my Bitcoin in a hurry, this is something I could do. Now, I'm going to pay a haircut because if you notice, the price is saying there, 1858 US dollar equivalent. What's the price of gold right now? Let me double check here. I know the price of gold is nowhere near 1858. It was in the 17s. 1762. All right. So you're talking, you're going to pay a pretty healthy premium if you choose that avenue. But that is one possible way where if these exchanges ever froze up and you couldn't get onto the exchange to trade your Bitcoin for Tether and then to trade the Tether for dollars and then get your dollars off the exchange, one thing you could do is you could just go right from your wallet and you could buy gold or you could buy silver, which precious metals makes up the very base of Exter's pyramid. We talk about Exter's pyramid. Let's bring that up. All right. Exeter's pyramid is the foundation of wealth when it comes to the risk of default and the quantity of wealth, right? During a credit crisis, this is how you rank the stability of an investment class. And all the way at the bottom, the very foundation of Exeter's pyramid is gold. That is the safest, the least amount of counterparty risk. And I'm going to put silver in this category also, gold and silver. The least amount of counterparty risk and absolutely no risk of default. When you hold gold, there's nobody who can go bankrupt and you lose your gold, right? There's nobody who can fail to pay you, right? Next up is paper money, right? And we're kind of seeing this right now. We're seeing a sell-off in derivatives, and we're seeing a sell-off in commodities and real estate as more money moves down Exeter's pyramid in a flight to quality. You're seeing yields are going down in bonds. That's the prices going up in bonds. People are flying into treasuries, and you're seeing people are flying into cash. Now, unfortunately, we are seeing gold and silver sell off as this develops. And I talked about in my last video how precious metals are often considered that the baby that is thrown out with the bathwater during a credit crunch. But that is a temporary effect. That gold and silver will quickly recover in a V-shaped bottom and becomes the number one asset to hold following a credit collapse. And the reason I'm saying that is because if this Evergrande contagion continues to spread, as I expect it will, we could see gold and silver sell off along with everything else. And that is okay. I have a lot of my personal wealth tied up in gold and silver and Bitcoin, and I understand that that is part of the risk, and I'm fine with that because I don't need the cash right away. It's it's not like I'm going to miss my mortgage payment if gold and silver go down. But I am ready to jump in and buy more if that happens. I do have a little bit in the second rung of Exeter's pyramid here, a little bit of cash that I've raised just in case we see a major sell-off in gold and silver. I plan to capitalize on that. Again, not investment advice. I'm just throwing it out there. This is what I plan to do. All right. And I'm not really sure where I would put cryptocurrency on Exeter's pyramid. I really don't know. I certainly would not put it anywhere near gold. It's way too speculative right now, and with the counterparty risk of the exchanges, which if the exchanges collapsed, it would affect Bitcoin, even if I didn't lose my Bitcoin, because I keep my Bitcoin in cold storage. But it would affect the value of my Bitcoin. So I'm not really sure where I would put cryptocurrency right now. I would probably put it somewhere in the ballpark of government bonds and T-bills, maybe a little bit higher. I don't know. Let me know in the comments. Where do you think? We'll say Bitcoin, right? Because when you say crypto, you're talking about some of these other altcoins, which are just hot garbage. But let's say Bitcoin itself. Bitcoin and lump in Ethereum. Where would you rank them on Exeter's pyramid? I'd really like to know where most people think they fall. I'm leaning towards somewhere in the middle right now. They're still very speculative. One other thing I want to point out about Bitcoin, and I'm just doing this, not really because I think it's material, but President Bukele, did I say that right? Advises his followers to buy dips, and El Salvador purchases another 150 Bitcoin. All right. And I don't think the El Salvador story is really that big a deal, right? I mean, it's symbolic. It's symbolic, a country adopting Bitcoin, and it's one of the poorest countries in the world. So if things start turning around for El Salvador, well, that would be a powerful argument for Bitcoin's adoption in other countries. But I just wanted to point out it's 150 Bitcoin that they bought. 150. I think they own like 700 Bitcoin now. It's something like $80 million US worth of Bitcoin. That also, look, it's not material to the actual price of Bitcoin. This story is not going to make or break cryptocurrency or Bitcoin. Although crypto critics will point to this and say, oh, somebody burned an ATM in El Salvador. You see, the people don't want it. And then Bitcoin maxis will say, this country has adopted Bitcoin. You see, down with the US dollar. Look, I'm somewhere in between. Like, I believe in the long-term value of Bitcoin. I don't see it taking over as the global currency. It's too cumbersome and too expensive to move around in small quantities. Sorry, guys. Even with Lightning Network, the fees are still a little too much for my taste. However, as an asset class, I love it. I love it as an asset class and as a holding. And Again, I don't want to upset the precious metals and the Bitcoin maxis, but I tend to include it with my gold and my silver, my precious metals. Now, it's much more volatile and speculative than gold and silver, but I do consider it a dollar alternative. I do consider it an inflation hedge, even if the price swings ridiculous. And I do think it will be over $1 million by the end of this decade. And I've got into that in other videos. And that's why even if Bitcoin keeps selling off, even if Tether collapses and Bitcoin loses 50% of its value, it will not change my approach to Bitcoin. I buy a little bit every week. I use an app called Swan. I'll post a link in the description if you want to check out Swan. You can click on that link. You'll get $10 in free Bitcoin. Full disclosure, that is an affiliate link, and I will always disclose when I'm using affiliate links. So I just want you guys to know that. But I stand by it. I use that service. I've been using it since February. I have been able to easily pull my coins off of the exchange and put them into cold storage without problem. And the fees are very low, so I like it. That is my approach to Bitcoin. I don't try to time the market. I put a little bit at a time constantly. I dollar cost average in, and my horizon is 10 years plus. Not next month, not next week. I look at the price of Bitcoin really for the entertainment value right now. When I talk about price swings in Bitcoin, I'm not sitting there trying to time my trades. Forget it. It's just way too volatile. Anybody who thinks they can time the market with Bitcoin is lucky or just full of it. Sorry, that's it. Anyways, guys, that's all I got for you today. The Evergrande story is not going away. It's getting bigger. Gold and silver probably under a little bit of pressure in the months to come and the weeks to come, but that's okay. Have some dry powder on the side. Again, not financial advice, just what I'm doing. Have a little bit of dry powder on the side. Be ready to pounce if you get that good opportunity. And always keep in mind that in the event of the exchanges starting to fail, there are other ways to exit cryptocurrency, like I pointed out with JM Bullion. Again, I am not at all compensated by JM Bullion. I just use them as an example. There are a lot of other gold and silver bullion websites that will allow you to pay with crypto. I just use them as an example because they're well known. Anyways, guys, thank you for your time. I hope you enjoyed this video. If you did, please don't forget, smash that transitory like button, subscribe to my channel. It really helps me out. It helps this channel to keep growing, and I'd be forever in your debt. Until next time, live small and dream big.